Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking inflation data that came out this morning, as well as market moves, and even a bit of a widening of breadth within the markets, as we are chatting with Joel Elconin, co-host of the Benzinga Pre-Market Prep Show, also editor of the Pre-Market Prep website. Just a note on Joel's show, the closing print today at the market close. He is having Michael Pachter, managing director at Wedbush Securities, on the show to discuss the markets. I'll post a link so you all can tune in at the closing bell. Joel, let's start off with inflation data. Broadly in line with expectations. We usually do see the PCE come in around expectations because it is one of the last reported inflation data after the CPI and PPI. But overall, we continue to see inflation generally moderate. It's not going straight down, but it is trickling lower and lower. What was your takeaway? What did you see within the markets from that data this morning?
Good afternoon, gentlemen, and thanks for accommodating me, having me on a Thursday as opposed to Friday. Goldilocks market here. We were sitting on some major weekly support this morning that has been tested, basis the S&Ps here a couple times. Market a little nervousness over the PCE number, the preferred inflation gauge for the Fed, and it came in line. And that's all the bulls needed. Ripped the market higher. At one point, we were on the verge of a new all-time closing high. I think we got some Fed heads, some speak that maybe took us off the high, but very constructive pattern here. People wanted to see the breadth widening in the market. You have Apple actually down on the day, losing a critical 180 area, and boom, picking up the slack with the small caps. So the market wanted to hear something on the inflation front after CPI and PPI put a little scare in us last month, but still on track to get down to that 2%.
Well, Joel, let's talk about the improving market breadth because everybody's been pointing to the small caps kind of lagging the rest of the indexes. But you pointed out to us a chart before we got on, just showing that it's getting close to breaking out here and there's more attention on the small caps now.
Yeah, I mean, what do you need? You need lower rates, right? These smaller companies, they have debt. The biotechs, they borrow money, and they need lower rates in order to accommodate their businesses. They have some of their loans locked in at lower rates, but anything that they're rolling over is coming at much higher levels, and it does it creates havoc on the balance sheet. So even though the TLT and the bonds have kind of just stalled here, they had pulled back from the recent highs. The TLT got the par pulled back to 92. The IWM, no, it just kind of held its own, and now just with the TLT and holding steady here, the IWM once again is trying to mount it. My pure number is 203 for the IWM because that marks the high, boy, way back in at the end of 2021 down to that October low, 203. That's halfway back. Not only do I like to see that level cleared on an intraday basis, in fact, today you reached your highest level in the IWM going all the way back to March of 22. Just think about the relative underperformance in the market by the small caps, and here you are on a day where you get inflation coming in check. Once again, the bulls are trying to get that above that critical resistance level and hold.
Joel, make sense of this for me because, as you said, small caps, they like lower rates, but they're looking to break out from levels that they hadn't seen since early 2022. You look back at the 10-year, kicking off 2022, 10-year was under 2%. Right now, it's holding above 4%. So it seems like the small caps are, or at least investors, seem willing to go into the small caps even with almost double higher rates.
Yeah, I mean, I think that what you do is you have to look at things on a historical perspective. While people, and I won't say you guys are in grade school because I know you're older than that, but the historical interest rates, have been much higher. I mean, my first mortgage on my house was in, double digits. Okay, so throw, just like in ice skating or diving, throw out the high, throw out the low, and you got to figure out which is more, which is normal. And 4%, 5%, that kind of environment, that is more from a historical norm, is the lower end of rates. So you're having to do, and what investors are having to do is kind of, readjust their expectations. If you're waiting for rates to go down to 2% before you invest in small caps, that may never happen again unless, the economy just goes into a tank, or you have a COVID like situation. So I think it's more not so much the expectations of rates going down, but holding steady and not necessarily going any higher.
Yeah, Joel, it's possible that the new normal is the old normal. The old normal was 4 to 5% rates, and now we're back to it, and maybe people are adjusting their game plan to the new normal being what it has been historically. Are there any other rate sensitive sectors that you think are being affected by these moves that you're noticing on your radar screen?
I mean the banks, if you got loans out at 2%, you're paying 5%. That's some arbitrage. It's not going to work too good for you. So these banks, I mean, there was a lot of worry about rates going higher, affecting some of the regional banks, and this is not bad. I mean, you've had some bad news on New York Community Bank that has not been able to get out of the gutter, but the KRE, had a strong rebound in December, had a little bit of a haircut, but now that's trying to rebuild the base. So you're looking, the banking sector. I mean, I'm looking at my JP Morgan. I bought that during the banking crisis back last April. I'm holding on to it. I was thinking, well, they might be the only bank around. So you look at that. Bank America, is having a decent rally. That is just, off its all times highs. Such a thick stock and a lot of dilution has gone on. But the banking sector for sure. And then of course you got to look, and we've talked about this before. The biotechs, right? XBI had some just explosive news. With Viking Therapeutics coming out with their own version of a weight loss drug, and that's excited the biotech market, who also depends. Now that's in the red today, huh? That's an interesting candle. But there's a sector that's got benefits from lower rates as well.
Joel, it seems like there's a lot out there that is working within these markets, but even just looking at the broad averages, going back to the tail end of October when the S&P, all markets it seems like put in some lows back then, it's been a pretty persistent rise higher, whether it's been narrow breadth or wide breadth, and the corrections, man, the corrections have been 4 days at most, and then just a move to new highs here. What do you take away from a chart like this where, again, the corrections have been shallow and very short?
Yeah, because there's a lot of money managers. They're underinvested, and they are scrambling to put their money to work. And you're looking at, what are you going to do? You're going to hop in here and buy NVIDIA at these levels, which, stick with the stocks that got you there. But I think you have and me too. I mean, I was sitting on a lot of cash, feeling great at the end of October, right? Look at me, look how smart I am. I'm not fighting the Fed. And boom, November, December, January, February, not looking so smart now, at 5, 6%, return on your equity. So I just think it's just such an underneath demand in the market that these dips are shallow. Now, I will say, that, on a weekly basis, we were teetering. I mean, I have my weekly levels, and just basis the S&P futures from the price action that you had earlier in the week, and then the price action that you had today. I mean, you got X marks the spot here at 50, 60. As long as the bulls can maintain the bid, make that the low for the week, distance itself a little bit. Of course, the path of least resistance is still higher in this market. Even if you do take out that level, I mean, I'm not looking for some, cataclysmic, decline of 5 or 10%. But when you look at these markets and you're looking for, corrections or retreats or to buy the dip, you got to look at things, incrementally. And you don't never hear me talking about intraday charts when I'm on with you guys. I do look them at a little bit during the day. But man, your dailies lead to your weeklies, and your weeklies lead to your monthlies. One other thing, gentlemen, that I want to bring your attention to is we are coming up on a quadruple witch expiration, which will be early because the first Friday of the month starts tomorrow. So 3 weeks from today, you'll have an unwind, and a lot of times you can see some wild price action in the weeks leading up to the quad witch expiration. And then a lot of times you see a strong continuation of the trend or a sharp reversal. Right now, looking at a sharp reversal, boy, I don't know what would do that. You do have some CPI data coming out on March 12th, so the CPI and the PPI on the 14th. But right now, bulls fully in control of this market.
Yeah, Joel, that's so true. The bulls are in control, and there's one other market that the bulls seem to be in control of, and that's the cryptoverse. So I got to get you to weigh in on Bitcoin, Ethereum, the cryptos. What do you think there, Joel?
Oh, I've talked about this with my wife, and over the years, and when it got up to like 60K, I'm like, I gotta get in, and then went through the correction and did it. I mean, you know what? Supply, demand, and you right now the scenario of limited supply is ruling the roost. They're looking at this as an inflation. They're looked at as an inflation alternative. Well, inflation's coming down, so it's got a story. Anything else? Me saying anything besides that? Me knowing anything about the halving coming up or any of this other stuff? I'd be talking out of my league. So interestingly, I mean, people are talking about the levels that it's at. I always like to look. I still look at the futures in this. I don't look at the spot because I like markets to actually close. So they have a mark. And what I've been seeing in the Bitcoin futures is just slow and steady higher with a rising open interest. It did come down a little bit over the last few days, but that's just saying the favor and open interest going up in the favor of the trend. It's continuing. So you did pull back a little. You might get a little red candle off today. But Bitcoin will give you, they'll give you a shot to, 2, 3 lows in the same area, 2, 3 highs in the same area, consolidation a lot of times before it has its next move, either higher or lower.
Yeah, the one fun thing about the Bitcoin sector, too, is all the projections that we get from the Bitcoin bulls back in the 6-figure range, some even pointing higher than that, too. Joel, what do you take from the bulls? Again, being in control here and then hearing all these projections of 100, 200, 300,000, even higher Bitcoin prices in the next couple years?
Well, when you start going to the grocery store and you start paying in Bitcoin, then I could put those outrageous price tags on it. Right now, it's just a store of value. It's not transactional. If it's to me, it's not enough to for a global economy. So when I start using the Bitcoin instead of dollars, then I can start putting those kind of price projections on it. But right now, I mean, I just take it on a day by day basis. I'd say if you're holding out for an all time high, and the only reason I'm not going to poo poo the rally here at this point is because the futures taken they account for the past and they account for the future. That's why they're called futures. So the basis the rolling front month contract, figuring in the time value of money, my next target on the upside is 73,790, and that would make it a new all-time high basis the front month contract. So don't want to call resistance until I find resistance.
Fair enough, because, well, that can be a loser's game when you're watching these markets continue to move higher and hating on every move, but unfortunately missing out on it too. Joel, very interesting to chat with you. Thank you for moving the time up to Thursday. We'll chat with you next week. I hope you have a great rest of your